2026, and we know the markets are in a turmoil, especially currency markets. Nobody knows exactly what's going on. I know this is because of war. I know there is a lot of commotion in the commodity markets. There's a lot of commotion in the oil because of what's happening in the Middle East. But what's being overlooked, in my opinion, is the currency markets. And I think that is where most of the action is happening and is about to accelerate and is about to present us with a lot of opportunities that we can actually use in our favor to make some decent profits in the coming weeks and months ahead of us. And that is regardless of how the war ends, is regardless of what the outcome of the war is, it is very, very important that we pay attention as to what's happening in the Forex markets. And I'm sure you guys know, and for the guys who don't, Forex is the world's biggest financial market. It's bigger than bond markets, it's bigger than stock market, it's bigger than absolutely anything, and it's bigger than stock and bond market put together, combined, and it's $6 trillion a day. So imagine, guys, it does the GDP of the United States, which is about $30 trillion worth of trading in less than a week. That's the scale of the markets of this particular market, which is what we call Forex markets. And it never sleeps. It opens up Sunday night and it is open 24/5. That means 24 hours and 5 days a week. And people don't realize that it is not as volatile as the stock markets. It is not as boring as the bond market. The moves they happen, they're very, very small, but because of leverage, they may seem like they are big moves. So a 1% move in currency, say in a major currency like euro versus USD, is a lot bigger than say a 10% move in a Cisco stock or in Alphabet stock or in Facebook stock. That's what people do not realize as to how big this market is, that a 1% move can actually mean a whole lot more for a country than a 1% move would mean for a company. For example, if Facebook moves 1%, it's not going to do anything to the company. But if a dollar falls by 1%, it is going to wreak havoc in the currency markets if it happens too fast. So, that said, I want to look at what's really happening in the currency markets and what is it that the war in the Middle East is making happen. First things first, guys. As soon as the war started, everybody hated Trump. Everybody's saying that, hey, the dollar is going to take a hit. The dollar is going to go to zero. The petrodollar is finished. Everything is finished. So let me um, pull up the chart for the dollar index. Let me get rid of these Bollinger Bands here. I usually use them for my technical analysis, but right now I am going to um, get rid of that. And we are looking at, let me get rid of this also. Okay, I'm going to zoom in. We're here looking at a daily chart for DXY. Okay, guys, when did the war start? War started beginning of March, end of February, right here. Where war started, 20, beginning of March, right here somewhere. So I'm going to put a horizontal line for right path. I'm going to put a vertical line, I'm sorry, from where the war actually began. Right here. This is where the war began. So let's zoom in even more. Actually, why don't we do a 4-hour chart for when the war began from right here. And then let's do a trend line for, okay. So what we're looking at is a 4-hour Dixie chart or DXY chart. What is DXY? DXY is the dollar index, which is a basket of currencies against the dollar combined, and is measured against the dollar. So right now, as you can see, when the war started, the dollar index was sitting at right around 98. Right now, it's sitting at above 100 right now. And it went actually all the way up to 100.5, and it's only a 0.5% lower than its high from when the war started. So let's drive this path here, guys. Okay, so went up. Okay, so what it's doing, it is making higher highs, higher lows, higher highs, higher lows, and if it breaches, let me draw a horizontal line, guys. If it breaches this level right here, which is right around 100.53, we are looking at an explosive move higher. All right, guys. And that is what I am expecting for um, DXY index to breach this 100.53 and go much, much, much higher, in my opinion, around 110. It's going to be the first halt, and then it's going to be going higher towards the 112, 413, even 115, and this time around. But the move is going to be very, very explosive. It's not going to be as smooth as what we see here, where it's making, going in a very kind of symmetrical rods slash very predictable, very smooth action, whereas not a whole lot of big candles are being made for every 4-hour period. So it's rather smooth, the move is. But once we break this 100.53, I think the move is going to get very, very explosive, in my humble opinion. So right now we are sitting at 100.03. All right, guys. So let's look at what. What I want to do is I want to look at the big picture first, okay, with the dollar, and I want to look at the big picture with the gold here, for example, which is XAUUSD, and everybody is saying gold is dead, and I'm saying it's anything but. Is it taking a pause? Yes, of course it's taking a pause, because nothing goes up in a straight line, guys. Nothing, absolutely nothing in this financial market goes up in a straight line. But look at that correction though, guys. It went, what happened here? Oh, this is a different chart. I want to show you guys this is interesting. I'm going to come back to this, but let me open up another gold chart here. But that was a very interesting chart. I'm going to come back to that, guys. So you have to stick around, because it's so very, very interesting. So let me pull up gold here. All right, guys. So we're looking at gold, but look at this correction. It goes up to 5,500, boom, down to 4,300, like a $1,200 correction in matter of few hours, guys. And again, it goes up to 5,400, boom, down to 4,000, and then boom, it bounces back. Right now, it's sitting at 4,400. Silver is even extreme. Is more extreme than compared to gold. All right, guys. So now, if I really zoom out, okay, and if I make this chart into, say, a weekly chart, in big scheme of thing, guys, is absolutely nothing. And when we actually look back 2 years, 3 years from now, this is going to look like one hell of a buying opportunity in my humble opinion. On a weekly chart is making a nice hammer, or yeah, a nice hammer right here. And these hammers are possible, not a possible, in more than 9 out of 10 times, these are the bullish reversal signs when if it actually completes its the shape, which is I think it will. So that said, why is gold taking a beating? Why everybody is on the bandwagon that US dollar is dead, gold is now dead. So if gold is dead and US dollar is dead, then what is undead? Where is all the money flowing? Because the stock markets are dead. Not everything can die at the same time, guys. So you have to keep that in mind. Yes, energy is up, oil is up, I understand, but it's up because of war. It's temporary. And if energy is up and 80% of the world is buying this energy in dollars, guess what it is going to drive the demand for? It is going to drive the demand for the US dollar. And that is exactly what we are seeing. We are seeing the demand for US dollar going higher. We are seeing US dollar strengthening. We are seeing stock markets going down because there's so much panic in the markets. There's so much uncertainty that people do not know, the investors, the traders, they don't know what's really happening in the marketplace, and they're panicking bad. And that is why the stock markets are taking a beating. That is why everything else is taking, all the commodities are taking beating except for oil because of the Middle East. And 80%, oh sorry, 20% of the world's oil follows out of Middle East on a daily basis. So now I'm coming back to the topic of gold. Why is gold taking a beating? Gold is taking a beating because right now the financial markets, be it Nasdaq, be it S&P, be it Nifty, be it FTSE, all these markets are are in a drawdown, are taking a huge hit right now. And the investors, not investors, more than investors, it's the traders, they trade on leverage. And I hope you guys understand, you better understand what leverage means because it's rather uh, elementary. So all these traders that are trading on leverage are getting a margin call. Margin call is when their equity cannot in the account cannot really sustain the open positions that are open on leverage. And what happens is then your broker, they call you and let you know that hey, you guys are running short on equity, you better deposit some money in your brokerage account or else will be forced to liquidate some of your positions to uh, to uh, to cover your shortfall in the equities or in the equity of your account because you are too highly leveraged. So that is happening right now. And the most liquid asset outside of US treasuries and cash is gold. So these investors, these traders are now forced to close their gold position and get out of it in losses because they have to raise cash. And the easiest ways to raise cash is by selling gold. So that is why gold is taking such a huge beating. So what I want to do now is I want to go back to that other chart that I had up earlier is the comparison of S&P 500 and gold. So the line in blue here is the S&P 500 and the chart itself, the candle chart itself that you're looking at, that is gold. So what I want to see is right now both the market, the S&P 500 and the gold, they are falling at in tandem. They are falling together. And what I want to see what happened the last time when there was panic in the marketplace, that was around 2008. And I want to show you guys what happened when that actually occurred in the marketplace. So now here, so let me zoom in here. Okay, so in 2008, so the panic started right around here Yeah, that's when the actual panic started. Yeah, it was right around June, July 2008. I'm gonna draw a vertical line. Uh, was it here? Yeah, this is the actual panic. Yeah, let me zoom in. So that's the actual starting point for the panic. And you can see gold is kind of following the market. Market is selling, gold is selling. Market is selling hard, gold is also selling hard till the market bottoms right here for the first leg down. But then something interesting happens. Market, let me get a trend line here. Market from this point on keep going lower, making lower lows, lower highs, lower lows. But the gold now decouples from the market. It starts going higher. Why that is happening? Because of the initial shock, there was a margin call. Everybody is trying to fulfill that margin call and selling whatever they can. And gold was the easiest thing to sell at the time. And that's exactly what's happening right now. They're getting margin calls, and gold is the easiest thing to sell right now. So that is why we see the gold is actually taking a hit that it's taking, because not because gold, the fundamentals on the gold or the technicals on the gold are bad. They are selling because they have to, not because they want to. That is why the gold is in a huge, huge sell off. And I think it's just a matter of time when it's going to come back, and it's going to come back hard. It's going to smash the all time records. It is going to go higher, much, much, much higher, and it's going to higher much, much faster, in my, again, humble opinion. So same is happening with the majors in the, let me change it here. So the war started right around here. Yes, here. Again, we can see British pound went up and then started going down. In other words, when the war started, dollar took an initial hit, and now dollar is strengthening because the oil prices are strengthening, and because majority of the world still is transacted or bought and sold in the US dollars. And at the end of the day, in my opinion, guys, this war is nothing but it's about petrodollar. The US does not want to relinquish their hold on the petrol market, their hold on the oil market, because they are forcing the hands, excuse me, of these Middle Eastern countries, and forcing them not to sell their oil in any other currency except for the United States dollar. And that is why the dollar demand, there is a perpetual demand for the US dollar, because all these Middle Eastern countries have to buy dollar or gold, no, sorry, have to sell their oil or black gold in US dollars. So, right, if anybody thinks all these wars, if you look at Libya, their guy, Gaddafi, he threatened the US, said that, hey, we don't want to sell oil in US dollars. We want gold instead for the oil. And we know what happened to Gaddafi after that. He was assassinated. Now, same thing happened with Saddam Hussein. He wanted to sell his oil in the US instead of US dollar, in gold and other currencies like Chinese yuan or euros. We know what happened to Saddam Hussein. Now, we know what happened to Maduro, because he didn't want to transact it. We had so many embargoes, and he didn't want to sell his gold in the US dollars. And we know what happened to Maduro. Trump got him abducted from his own house. His own people betrayed him, and that is sad. So Maduro was kidnapped and put in a jail in Brooklyn to as a war criminal, which, in my opinion, is very, very unfortunate that that happened. But that is exactly what happened. There is nothing anybody can now do about it. So, anybody who threatens the petrodollar regime, if you will get wiped out, will get obliterated, and that's exactly what Iran was doing till now. Uh, they refused because of the embargoes and also their stubbornness. They refused to sell or transact in oil with in U.S. dollars. Instead, they wanted alternatives like euros or wons or with Indian rupees and Bitcoin, all those kind of things, but not US dollars. And that didn't sit well with the president of the United States, and that's why they decided to do what they decided to do. And it's all in front of our own eyes. So that said, I hope I made some sense for now. I'll hang up for now. I have to go take care of something personal. And what I'll do is I'll be back and we'll kind of delve deeper into this topic. Till then, you take care of yourself.